We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Jerome Haegeli, who's Group Chief Economist for Swiss Re.
Great to be with
welcome.
you.
Thank you very much indeed for joining us.
Thank you.
So it's a very complicated economic background at the moment in which reinsurers are operating. What should the industry be looking at in particular?
As you say, extremely complicated, very uncertain outlook. But let's face it also, 2025, for the global economy, for the US, as well as for the Eurozone, economic-wise, it has been better than expected. The economy has shown remarkable resilience. That's the good part. On the more negative part, we also know that the trade war on tariffs on goods hasn't really fed through fully in the US and data. So we still expect a softening in the US economy in this quarter and next quarter. It's a softening, it's not a recession. And again, the US economy is holding up, but definitely something to watch out and something to continue to expect because it's going to come. What we are seeing in terms of tax changes, it's going to be more stagflation. Again, higher pressure for inflation, not as much by far as we had seen in the past, but still higher pressure for inflation, especially in the US, and lower growth coming forward.
And do you get a sense as to how reinsurers are prepared for these conditions?
Reinsurance, insurance companies, very well prepared, right? I mean, we have, as an industry, but also the economy, learned our lessons with the COVID-led inflation surge. So there's an extreme discipline in terms of underwriting. If you think about attachment points, if you think about deductibles, and I would continue to expect this in the renewal season.
So AM Best still has its positive outlook on the reinsurance segment, which should suggest, I guess, that it's a good place for investors to be looking. Do you get a sense as to what investor appetite for reinsurance is?
No, I think there's good reasons for investors to remain optimistic for the insurance and reinsurance industry. First of all, interest rates levels, they remain high and higher for longer, especially at the longer end of the curve, while the Fed will be cutting this year and probably already this month again. Interest rates is a good driver in terms of investment portfolios, and this will remain. And also the underwriting discipline, as just mentioned, I think that gives reasons for optimism in terms of continued strength in profits. This is not a market where you look for growth. This is a market where you look for profits, and that's a big difference.
Yes, so on that note, as the cycle turns and perhaps prices start to soften a little bit, what opportunities does that give for well-capitalized insurers and reinsurers?
I think the term of softer prices, I think it's a little bit misleading. I think there are only bad prices or adequate prices, because price is just one dimension. You also need to look at attachment points, deductibles, the contract, how disciplined the market is on the contracts, terms, and there I would expect to have continued discipline, meaning that prices will remain adequate. Even if you see prices declining across certain lines of businesses, the point is we need to look beyond the one-dimensional factor, which is prices.
So what role do reinsurers have in evangelizing for a good, well-capitalized insurance and reinsurance industry?
It's super important. We just released yesterday our Sigma report on P&C market. We look back over the last 20 years. So much dynamism in the P&C market. And what we clearly see is this super important and key pillar of risk transfers. This is reinsurance, this is retrocessions, but it's also alternative capital solutions. Actually, today, think about that. If you look at the statistics that we read in our Sigma, and please check it out, and also check out our latest Sigma client portal, which provides state-of-the-art services for clients, you see actually that reinsurance premium growth now is double the amount, almost double the amount of primary insurance, meaning there's a lot of recognition of the risk, and there are plenty of risks out there, but not only is a lot of recognition of risk, it's being passed on to reinsurance. So the reinsurance industry, risk transfers, key pillar for economic stability, and this will remain like that.
So amid all this uncertainty, what issues do you think now are being missed today that will matter most tomorrow?
There's a lot of talk and a lot of coverage about geopolitical risk. Geopolitical risk, political risk is the hardest to forecast because it's very binary, and also markets won't move in one direction or another until the risk has been realized. So I think number one risk is actually not just geopolitics, but actually how geopolitics doesn't drive or it doesn't is not discounted in markets. In my view, the number one risk is complacency and not geopolitics. If you look at financial markets, there's zero downside risk being priced in. So that complacency, that is what worries me more so than geopolitics.
Jerome, thank you so much for joining us today.
Thank you very much.
For AM Best TV, I'm Richard Banks.